Good morning, folks. My name is Derek Baltimore, and I'm a Director of Annuity Sales here at Power Brokerage. So today I've been asked to share a few common topics that people ask us about annuities. And the first being, what is the average return of an annuity? Well, this is a somewhat difficult question to answer due to the fact that there are many annuity types that consumers purchase. So since each client has a different reason and desired outcome for their funds, and the annuity types offered are based on different situations, the answer can vary wildly. However, in a larger sense, annuities are basically bond proxies, and these are meant to provide bond-like returns from the investment and provide steady growth potential with tax deferral while in the investment. Now, all annuities have a minimum guaranteed contract amount, which they provide the client, which is slightly over 1% annually inside the annuity. Now, in addition to that, clients typically have the opportunity to allocate funds to an index, such as the S&P 500. However, they're not actually in the S&P 500. It's just simply a snapshot of the closing index on the value of the S&P the day before the contract is issued. Then they look at it again in 365 more days, and they take a value picture of the index. If the value on the second look is higher than the initial snapshot, then the client is able to receive a credit up to the maximum specified for that particular index. Let's say the S&P 500 and it was 5%. So if the S&P 500 was up 5% or more for that one year period, and the annuity investor purchased a product, he or she would receive a 5% credit to the account value of the annuity. However, if the index was lower at the end of those same 12 months, the client would lose no money and simply would receive a 0 credit for that year. That's the 0 is your hero scenario with a annuity with the annual reset design. So you either get a credit or you do not, but you have no principal risk to your funds. So it's kind of built in that investors have built-in principal protection with any annuity. Anytime an investor can maintain a reasonable compounding rate of return between 3 and 5% and have principal protection, I would say that is a fantastic investment. Thank you for your time today. I'll have more topics coming up, and we'll talk to you soon.